Okay, everybody, welcome to today's show. And I'm Jim, the option professor. Just to get some housekeeping out of the way, options involve risks, are not right for everybody, and you should consult your brokerage firm to determine your suitability and risk tolerance. Today, I am definitely going to be sharing some opinions, but that is all I'm sharing with you. I certainly am not giving any advice out. So I am going to be inviting you to put into the chat box some stocks you might want me to take a look at. But before we jump into that, if it's okay, I'd like to go give you a little around the world on what I see happening now, which I'm sure many of you might want to know. So again, my view right now is that we're having a pullback, as you well know, and we are coming down to an area that had better hold up. And what area is that? That comes right in at really today's lows. Today's lows come in at around 63.76. And I've got a support at 63.68. So that's pretty much right on the line. Last time we were down here in August was a fabulous place to buy. And we'll find out if today's a fabulous place to buy in the days ahead. Now, what is the other thing that I'm looking at here? I'm looking at the VIX. The VIX has been very good to me. And I'll show you why. Because in May, you can see after this was all Trump on the lawn with his 300% tariffs, obviously scared the whole market out, thought a recession was coming. Everybody, big money, little money, everybody money was running out of the market. So the VIX spiked up, but then it started to subside. It got under 35, which is a sign that that's over. And then once it got under 25, it tells you it's highly probably over. And then, of course, under 20, it's been declining pretty much ever since. You had that one spike in August, that's it. So what has that told me? That tells me the market's going to be rising, rising, rising because volatility is subsiding. Why is it important for volatility to subside? Because all that big money, institutions, family home offices that head for the hills in April, they got out and they need to come back in. So obviously, as the volatility subsides, they become more comfortable allotting money, and they've been very comfortable coming back in, which has been going on for over 90 days. As you can see, about 90 days it's been going on. Now, we did have some bumps in the road this week because obviously some of these companies have gone way up and their valuations are beyond dreams. So obviously that was a problem. And obviously, too, NVIDIA and Palantir are the two poster childs, but not really NVIDIA. NVIDIA's PE ratio is not that bad. But obviously, the price to sales on Palantir is just ridiculous. And so, you're going to have corrections on that kind of stuff. And there seems to be a bit of rotation out of what? Out of the tech sector into some of the ones that are on their way back up. That might be real estate stocks, that might be stocks in pharma and healthcare. There seems to be a bit of a let's sell the big frothies and rotate into some of the cheapies that might go up as the year goes on, that maybe pay better dividends and are a little more defensive. Because right now there seems to be a little bit of a lean towards defense. But at any rate, on this VIX, it has started to turn up. Okay, so that would be a negative. And if it blows out the 1819 number, as you can see, where's the gold line up there? The gold line comes in at 19. So 19 and 21 are your key numbers on the VIX. If you go up to 19, we're going to go down further. If you go up to 21, we're going to go down further. And if you go above 21, we're going to go down a lot. Okay, so let's go back to the S&P and the Qs and see what that could mean. Now, again, I'm thinking that it could stop here too. Again, you see the Qs. If we can hold this number here right around 564, we did go underneath it, but we're right around it again now. So these are rising numbers, which is obviously an uptrend. It's certainly a trend that's been going on for quite a while and had a big price jump. So again, if we do start falling apart, there is a gap right here at 530 that it could go to. And there's gaps down here at 490 and 520 or 510 ballpark area that it could also go to. So you have to be a little bit careful. But, if it really fell apart, the first stop I would think would be 530. Now, looking at your S&P. Now, again, to give you an idea here, this is why people think we're a little bit extended because, this is a 5-year graph, the weekly graph. And you can see we're way up here. So it's reverting to the mean. Okay, well, the first reverting is coming down towards here, maybe toward the former highs. So that's why 6150 on S&P is something to consider because that was another former high. So if we are going to stop, we should be stopping somewhere in the neighborhood where we are. And if we're not going to stop, again, that 530 area, here you got a bunch of support at 517. And then, of course, you got these former highs here at 540. So there's your neighborhood of support. Let's call it a little bit under 520 and a little bit over 540. That's your neighborhood of support. Is it going to get into there? If the VIX jumps to 19 or 21, it's got a good shot of going into there. And if tomorrow, when he starts talking, that emphasis is put on that PPI inflation, that wholesale inflation that came in at 0.9%, annualizing out over 10% inflation, that's a high number. I don't know that you can ease into that kind of number. So the bottom line is then as far as unemployment is concerned, I mean, I don't know what everyone's talking about. 4.2% is about as good as it gets. I think the historical low happened during Biden at 3.8%. So 4.2, everyone's working. Now, why is there no new jobs being created? Because everyone's working. And are you going to bring on more staff when these tariffs are all over the place? And now people are saying there's no fine print. And they're even saying some of the tariffs have not been adjusted yet, like on autos from Japan and Europe. They're still at 25%. So there's a lot of, shall we say, who shot John going on out there. And that's not the environment you're going to add 100 more new employees. So, but I'm saying everyone's working, and I'm saying their wages are going up way faster than inflation. So I'm saying that ain't bad. And the retail sales and stuff like that, they're still coming in pretty decently. Prices paid came out today. That was way up in that Philly survey. So the prices paid, the wholesale PPI, these are not good directions, right? And the Fed has a dual mandate. Well, looks to me like everyone's working, so that mandate looks like it's done. Okay. Now, ongoing claims is high because, again, if you lost your job, it is harder to get a new job because we don't need any more people because we've already got enough people and we don't know what the future holds. That's the story. Now, that could change very dramatically once we get more numbers in, or it could turn south because those tariffs are going to go someplace. They're going to go to the exporter, maybe. The guy who distributes it, the Walmarts, maybe. The consumer, maybe. Well, if you're running a business on import or on or distribution, wouldn't you raise the prices and see if they'll pay them? And then if they don't pay them, then you can just back downward. But in this day and age, people just get a bill and they pay it. They don't care. They don't look at it. They don't squeeze it. You know what I mean? So the bottom line, it's very possible that Walmart and everybody else, they'll just raise prices, and the people who are working, they'll just get used to paying a little bit more, and they'll pass along that inflation. That's very possible, if not probable. And then if in fact there's a problem, and what would be the problems? The problem is people aren't walking in your door. Then you got to lower the price. But if you go and immediately start eating the tariff yourself, it's going to kill your margin. It kills your margin. It's going to kill your profit. It's going to kill your valuation. It's going to kill your stock. So the path of least resistance is raise the price and see if they'll pay. Okay. So we'll see what happens. But again, that's why I have not been in the camp that these rates are going to be cut. And I'll show you exactly why on that. Not because I show you Texas Instruments, but because I show you the 10-year note. Now, again, this is the 20-year graph, which has saved me from getting overly optimistic on interest rates twice. Last September, they cut 50 basis points. But what did it do? It made a reversion to the mean down to 360, and then it was right back up again. Then they just had the crash of April, when the stock market went to 4,800. Again, supposedly interest rates are collapsing. All it did was revert to the mean, and the mean came in at around 380 or 90, whatever, and then right back up again. So right now, here's where we are. If you started hearing 450 or 475 on the 10-year, this market is not prepared for that as far as those places like real estate, those ones that had rallies. Okay, a big bump up in yield here would be problematic. Now, again, if we were to get underneath the blue line and actually close under it, which would be where? 412, then, of course, these lines could roll over, and then we can start talking about that 3% that everybody thinks it's going to. But since everybody thinks it's going to there, you put a little bit of credence that the other side might be right. the lonely side, the side that thinks rates might go higher, yields might go higher. So again, you're right there at a critical point. And if they lean towards the inflation problem, you can forget about the 3% interest anytime soon, unless, of course, things change dramatically. So there's a little bit of a rundown there, and I can show you different stocks that you might have. I'll give you a little tip on the gold price because some people are looking at that. Let me give you that. We'll spend 15 minutes or so on me updating on what's happening, and then we'll go right into the different stocks. Okay, so anyway, gold is very tough right now because it's on both sides of the coin. It shows like it's going to rally, then it comes down. Look at those moving averages. Could they be flatter? Why is it that way? Because gold trying to figure out if rates are not going down and yields are going to rise, it's possible gold's going to break 3,300 and go into the abyss for $300. Very possible. If they were to not cut and if they go to a more hawkish tone. If they go to, we're going to drop, we're going to keep dropping, it's going to 3%, we don't care about inflation, it's one time only, who cares? Then, of course, you can take out 3,400, 3,500, and maybe go crazy on the upside. But this thing does not know what to do, and that's why it's on both sides. I would be prepared for either eventuality. You take out 3,250, you're going to hit the abyss. If you take out 3,450, obviously it could make a good run at 3,500 and then more so. I heard that Fidelity's looking for 4,000 on gold next year. If they're half right, then obviously you have to get above 3,400 to get there. So, of course, once it gets above 3,400 and gets moving, that would be your call to action as far as the bulls are concerned. Okay, let's look at Bitcoin real quick. Bitcoin. It's been very trending market here. Okay. Now, again, I loved it down here in the 50, 60,000 range back in July last year. Loved it. Then I loved it on the correction in April when Trump scared everybody out of everything. Okay. Then I thought it would pull back and fill a gap. Let me show you. There's a gap that was there right around here in the 113 area. On my other chart, it looked like more like 113. Obviously, the 1 year graph is starting to look like it's rolling over. And where's your resistance? 117. You get above 117, 118, you're back in the ball game. But if you don't, and you don't see here, these are former highs. You want this 110 area to hold up. These are former highs, and you got the red line right there coming in at what? 112. What's the low today? About 112. You get it? You're right into some support in this neighborhood, 110 to 112. If you break, looks like 100. Looks like 100. And if you break 100, then something's changed. Now, I'm going to give you a little tip on MSTR. Why is MSTR having so much trouble lately? Well, you can blame Jim Chanos. Why blame him? Because Jim Chanos came up with the concept that MicroStrategy has so much X amount of Bitcoin, and then the stock is priced at X. Well, the price of the stock versus how much actually they own of the Bitcoin was trading at a very high premium. And Mr. Chanos, among other shorts, they believe that premium is going to go away. Well, the problem is the other day, Michael Saylor came out and said it's possible that they will sell stock and issue more stock, which people look at the word and they say dilution. And if you're going to dilute my stock, I don't like that. And that's why you've gone from 450 down to 335 in the last short period of time. And if it keeps going, who knows if it can't go back to 200. Because again, if they're going to take the premium that the stock trades at over the actual value of the Bitcoin, obviously that's not the music they want to hear. And the last thing they want to hear are these guys going to start issuing a bunch more stock, because that's dilution and people don't like it. That same problem is happening a little bit to Bitmine, which was very good for a while, but it is pulling back. But these guys don't trade at quite the premium as MicroStrategy. Plus, I did a little rough math. 30 to 70 is a $40 move. 61% pullback takes you to about 45. So I'm viewing 45 as a little bit of a line in the sand, which it has held so far. And you see this line here? If we can close above 53, I would say we're back on the bike again. So there's some numbers for you to chew on if you are, and look at my green line. Where's that come in? 44.62, right? What I say? 45. So that's the neighborhood. If you wanted to take a bite of the apple, that might be a place to take a nibble. And of course, if it breaks above 53 and then takes above 70, then you could be really back on the bicycle. This is a company that's got a CEO, Tom Lee, and a big investor in Peter Thiel and others that they believe accumulating Ethereum over time is going to be a great idea because it's such the backbone of the stable coin, their blockchain technology, etc. So that's the story. The story obviously got frothy at 70, and now it's had the pullback. So let's see if 45 holds, and let's see if 53 gets going. And then, of course, if it takes out 70, its happy days are here again. All right, so that's really all I had. I think a quick thing on energy. How is that crude looking? Because everyone's negative on crude, but I understand the inventories are dropping, and everyone is negative, right? So I can see here that on my 20-year graph, it's still holding that purple line. Purple line comes in at 63 bucks. So stay above 63 bucks is a good deal. I mean, it's better than collapsing, which is what it'll do if it starts taking out 55, right? So getting back above these two lines, which is 65, 66, that would be even better. Now, heaven forbid you ever get above 75 again. Look at all this area up here that nobody's really waiting for. So I'm not really that bearish on oil because it seems to be holding the 40 level on RSI. See? And again, as long as it holds 40, it's possible these are still the low area. So let's keep an eye on it. Again, a lot of people are bearish on it. Let's take a look at your questions here. You probably have some stocks for me. Let's talk a look at them. Okay, let me write them down. We got CNC and we got CBRL. And those are two that we'll look at right now. Thank you for your question. Okay, so the first one is CNC. That's not ringing a bell to me just yet, but it might. No, Centene. I know Centene. Let's see what it looks like. Okay, obviously it's been in the tank lately, so let's see what it looks like. Yeah, that's called, let me put it this way. Up here, when all the averages are together, that gives me my sell signal. It goes up and tests the blue, sell it again. Test the blue, sell it again. They all come together at 60, sell it again. What do you do down here? I don't know. Looks like too low to buy and too low to sell and too weak to buy. That's what it looks like. Do I have any evidence of any kind of a turn? Well, you got a big gap there, so obviously that's seductive. But, that blue line isn't kidding around. It's straight down. And these two are meeting. So the longer it stays above 27 bucks, it's good. In other words, that's good stuff. Got to stay above 27 bucks because you got both of these guys meeting up right here. And every day that it does, these averages will obviously rise. That's good. So there's a good thing to remember, 27 bucks. On the 1 month graph, again, you got a buy signal on it at 26 bucks. So if you had it at 26 when this thing told you to get in, then obviously you could put a get out point at 27 and you'd have a better than break even stop. There's a gap here. So it's possible it'll come down here and fill that gap. And if it holds and then goes back up, that might be a good place to take a bite if you thought it was still going to be bullish. But again, obviously, I don't know the stock that well. They obviously either had bad earnings or bad something that caused it to drop. But it's no surprise that it dropped. The darn thing's been deteriorating since October of 2024. What do you think? What do you like? My brother used to say, Jim, what do you expect? Well, I would have expected deterioration because that's what that chart looks like. So that's the story. The only bright light I can tell you is the longer it can stay above 27, these what do you call it? These averages can start turning up. Give me another one here. CBRL. Cracker Barrel. They got all those knickknacks in the store that's right next to the restaurant. I like this place. Makes me feel like it's, out in the country, Iowa or something like that. All right. Well, obviously they didn't do very good with their report because their report came in and sent the thing tanking. Okay. You got any good news, Jim? Yeah, let me tell you the good news. The good news is that you have a low here and the RSI was 34. And you got a low here, and the RSI was 38. So you got a little bit of a divergence, which means the selling did dry up a little bit, but it can't get through blue, which is staring you right in the face at 70. So once it ran up here, that was your opportunity to get out or get selling. Okay. Now, what's the shorter term weekly showing you? Again, better hold this number. Where are you? Right around 53, 52 bucks where we are now. We don't want this thing under 52, 53 bucks. And the longer it holds, the more likely it could take out the purple at 60 and make a run for 90. So there you got a line. You have to have some line to defend against, right? And they goosed it underneath it, and now they're trading above it. That's a good sign to me, because whenever they do that, sometimes it's stealing stops, right? And then it's going to go up. So 52, 53, big numbers. And then, of course, here you go again. I got my gold at what? 51. I got my purple at 52 and a half. So let's call it 51 to 53. That's not very far from 53. So you're right into the support zone where if it's going to stop, this is the neighborhood where it could stop. And if you look at the shorter term, meaning the 2-hour graph, you have a low surrounded by higher lows. That's not terrible. And if you look at the 30-minute, again, dead cat bounce is all you can call this thing. But the RSI hit 15, so they called the dogs off. But that's all you got is a bounce. Bigger picture, stay above 51, 53 is constructive, is very constructive. But again, this is another one where, come on, this thing has been deteriorating. It was deteriorating ever since 66. So, I mean, this thing dropping should not be a surprise. That's been the direction since July. If you were hoping it was going to go up, you were going to hope that it broke through green and broke through blue. That's a big hope. And then, of course, when they announced earnings, which I don't know if that was the cause, but I would imagine that's it. And, maybe people aren't going to that kind of place anymore. They go wherever they go. Changing their spending habits. That's what people are calling it. Okay, let's just see if we got anything else on the docket here. Anybody else got any stocks you want to take a look at? UNG, Nat Gas. Well, Nat Gas, we've been waiting for that to turn into a sustained bull market for a while. Oh, we got two more. Let's go fast. Okay, the rapid fire round. We got UNG, we've got HD, and we've got AMD, and that'll probably close us up. Okay, so thank you very much for those. And let's go start out with AMD. Okay, so AMD on a long-term basis is bullish and it turned up here at 120. So you got bullish at 120. You're doing pretty good. On the 5-year, again, got bullish around 120. You're doing very good. On the 1-year, you're starting to look at a divergence because you see this RSI is up at 80 and you see the RSI here is at 65. So that told you that it ran out of steam up here and you should have been hedging or doing something. And now it's reverted to the mean. So right now, it's very important that it holds this neighborhood around 160, because if it doesn't, there's a long way to go further down if it starts deteriorating further. Again, 150 would be another logical place for it to possibly stall out if it gets going further down. But if you're in there now, let's hope that this has just been a correction. Let's hope that the VIX does not take out 18 or 20. And if those two things occur and we start going back up because of NVIDIA's earnings next week, this thing could very easily get back on the bicycle, but you definitely wanted holding these recent lows. Okay, next up is Home Depot. And again, this is all about the housing, because they're not buying refrigerators apparently, but they are fixing up their house. But again, this is another one that got a pop, and that pop has come back down. Okay, so the bottom line is people are saying, if interest rates aren't really going to fall, then the housing isn't going to come back, then we're not going to need Home Depot. That's why it's backed off. But it is holding this number here, and that number comes in at 396. So if you're bullish, you definitely don't want it to break under 396. And even this high here would be something else, which is around 390. So you got 390, 396 as your neighborhood of support. And again, overall is still in a bull market, but obviously it could get choppy. It is trying to break out, but again, where's your red line? Comes in right around 387. So there you go. All right, so Home Depot looks okay. Having a pullback, you definitely don't want it. You want it above 390, 396 ballpark. Stays in front of there, then obviously these numbers can continue to matriculate to the upside. Start breaking those numbers, you got a problem. And the other one we had was UNG. And that's natural gas. A lot of people have tried to make money in this natural gas. First of all, I don't know what happened to this thing, but that's a weird looking price, right? So right off the bat, I'd say, hey, can you trade something else that doesn't have a weird looking price? So here you got natural gas. Down here, you're obviously sold out from 24 down to 12, and you're and this is the RSI is around 30. I don't know what can say too positive about this thing, you know, unless you know something about the natural gas market. I don't. It had a rally to fill this gap around 1260. Let's just look at the RSI to see if it looks like a sold out deal. 26 and down here. So again, there's a divergence down here. Okay, but that divergence has caused a rally up towards the blue line. It hasn't caused a rally up to purple. So again, if there's other stocks you want to trade on the natural gas, you know, everyone likes to trade LNG. Obviously, a much better looking chart. Sometimes Range Resources is popular, and that's turning up a little bit as well. So, you know, there are other things to do with, but again, this looks more like the other chart. It looks like if anyone's interested in natural gas as far as the upside, LNG is the one that they're looking for. Okay, we're getting close to the top of the hour. I don't want to waste time here. I want to tell you how I can help you. We have got a offer here where there are 3 things we help you with. We give you an options master class. That's 3 sessions, 6 hours, and it comes free with your subscription. So it's a $397 value we include with your subscription. So if you need to know more about options, this is the way to do it. The second thing is every Sunday night, you get in your inbox a options alert service where I go over all the markets like I just did. I also give you ideas that I think look attractive, and they could either be shorter term things or sometimes they're longer term things, like a 6-month option or a 9-month option. We had things like Oracle at 160, Constellation Energy at 180. We had NVIDIA down at 100. If I see something that I think you want to lock in for a longer period, that'll show up in the longer term ideas. So you get ideas every Sunday night, plus a review of the markets. You get that class, which is very helpful. And the last thing you get is you get coaching, where you get my cell number, you text me, and if you have questions, we talk about them one-on-one and try to get you to be the best option trader you can be. So I think that's a great opportunity. You can go 90 days for $297 or for the whole year, $897. Again, a class, ideas, and coaching with a guy who's been doing it for many, many decades. How many times do you get to talk to the principal who actually sends out the report? Not too often. So I know this is a good idea. So anyway, please take a look at it. David's going to put up the link. We're coming to the top of the hour. I see on deck is Dave Landry, always an interesting man. And so I'll be passing the baton over to a very capable speaker who's coming right up.